Inflation can be a concern because it makes money saved today less valuable tomorrow. And high inflation is certainly one of the hottest debates in the world economy today. I would say generally it's a topic that you can pretty much always find in the news. You can find headlines warning of inflation, stagflation, or even deflation pretty much on a daily basis. Now recently, Jack Dorsey, who's the CEO and co-founder of two multi-billion-dollar companies, namely Twitter and Square, well, he tweeted that he thinks hyperinflation is coming. And obviously this tweet has got a lot of people talking about the likelihood of an hyperinflationary period. So in this video we will discuss whether Jack Dorsey has a point, how likely it is that modern economies will actually experience hyperinflation, and which investment will best protect you if hyperinflation were to occur. So without further ado, let's get started. Okay, so what actually happened? Well, Jack Dorsey decided to publish the following tweet on his very own platform the other day. He wrote, "Hyperinflation is going to change everything. It's happening." And he later added two more replies. One specified where we will witness hyperinflation. And in the other one, he stressed that it's not like he wants hyperinflation to happen, but expects it will happen regardless. Now, I think to logically structure this video, we should first of all take a look at two aspects. First of all, what exactly is hyperinflation? And then, who is Jack Dorsey and what are his incentives to publish such a tweet as the CEO of two multi-billion-dollar companies? So let's first define the term hyperinflation. According to Wikipedia, hyperinflation is very high and typically accelerating inflation. It quickly erodes the real value of the local currency as the prices of all goods increase. Unlike low inflation, where the process of rising prices is protracted and not generally noticeable, except by studying past market prices, hyperinflation sees a rapid and continuing increase in nominal prices, the nominal cost of goods, and in the supply of currency. Hyperinflation is starting in the month that the monthly inflation rate exceeds 50%, and it is ending when the monthly inflation rate drops below 50% and stays that way for at least a year. So what this actually means can be nicely illustrated with the current example of Lebanon. Lebanon's annual inflation rate is the highest in the world right now, as Lebanon's consumer price inflation rate rose to 144.1% year on year in September 2021, the highest since March. Now, I have read on Twitter that in supermarkets you can't even see prices next to the products anymore. Prices are not displayed on the shelves as prices increase multiple times a day. And apparently on some days supermarkets do not even open, as supermarket owners can come up with adequate prices for their products. And obviously the purchasing power of Lebanese people has fallen drastically over the last year, and people struggle to pay for their rent or even afford food. And the country clearly is in a severe economic crisis. All right, now that we defined the term hyperinflation, next, who is Jack Dorsey and what gives him the right to claim that hyperinflation is around the corner? Well, as I said, Dorsey is an extremely successful entrepreneur who manages two multi-billion-dollar companies simultaneously. Now, if Dorsey decides to tweet that hyperinflation is coming, you probably wonder what this macro prediction is based on. And here we have to get back to Jack Dorsey's position as the CEO and chairman of Square. I would say, put in a nutshell, Square is a popular service that allows users to buy, sell, and send money using any Apple or Android mobile device through Square's Cash app. And Square also enables millions of small businesses and merchants to process payments via smartphones. They also enable them to accept credit card payments, to track sales and inventory, and to obtain financing. And that's obviously a lot of data. Payment transaction data, consumer sentiment data, and Dorsey has the tools to track how these metrics develop over time. So sure, arguably Dorsey has a better perspective than most of us. But does having access to the data Square has allow Dorsey to accurately predict long-term inflation rates? Can he predict hyperinflation? Personally, I would argue that A, there is a major difference between having relevant data and having a truly robust data set that allows you to make such bold predictions, and B, that many other institutions, such as the Fed, for example, they have access to relevant data too, and they very likely have access to actually superior data sets. So I would argue that hyperinflation would be a real concern. Again, that's price increases of 50% every month. We would have heard about that. And I would even go so far as to say that even the Fed, who probably has access to the most relevant data sets, even they probably cannot reliably predict inflation rates. So let's take a look at the facts. The most widely watched and used measure of the US inflation rate is the Consumer Price Index, in short CPI. And the following graph shows the inflation rate in the US measured by the CPI, and the data goes all the way back to 1914. Clearly, there is a spike in 2021, and with 5.31%, the inflation rate is above the Fed's long-term inflation target of 2%. But it is still far away from a consistent 50% monthly increase in a broad basket of prices, which would be required to speak of hyperinflation. And this graph here shows the inflation rates across various countries. It shows that in other countries too, prices are rising more quickly than we are used to, namely in Germany, Spain and France, but also in the EU as a whole. But again, if you average it out, the US dollar, for example, actually had an average inflation rate of 3.58% per year between 2019 and today, which is actually an average or slightly above target inflation rate. And sometimes the CPI index is actually criticized as it might overstate or understate inflation. So an alternative is the core CPI, which removes energy and food prices because they have a tendency to be highly volatile. And this graph here of the core CPI and CPI in the US shows how volatile the CPI index can be. But it also shows that inflation as measured by the core CPI is above its 20-year average. But again, we're nowhere near hyperinflation territory, and core CPI data actually indicates that the actual inflation rate may be a tad lower. Moreover, I actually came across this interesting graph here, and it shows the price development of reopening versus non-reopening components and energy. And according to this graph, prices of non-reopening components have actually been quite stable. And without getting into too many details here, here's one last inflation measurement. The Fed actually prefers to use the PCE price index when gauging inflation, as data acquired through business surveys tends to be more reliable than the consumer surveys used by the CPI. And again, as of now, there are no signs of hyperinflation. So if we consider this data, what frustrates me is that to me it seems like some people confuse hyperinflation with sustained above target inflation or even stagflation. But those are two or three completely different things. Hyperinflation and high inflation actually have very little in common. Again, let me explain that. Hyperinflation is a consistent 50% or more monthly increase in a broad basket of prices. If you compound this, we're speaking of an inflation rate of 12,800% annually. So that's really a doomsday scenario. It is essentially a complete destruction of a national currency. You would actually burn your money, or you would prefer burning your money because it would be cheaper than actually buying firewood. Jack Dorsey is certainly an extraordinary entrepreneur. But is this really someone you want to trust with regard to such bold macro predictions? I would certainly not place too much emphasis on his claims. As Twitter user Howard Linson put it, everyone that gets into stocks and markets go through a period where they become global macro experts. Moreover, what's worth highlighting is that Square actually has an investment in Bitcoin. The firm invested $50 million in Bitcoin in the fourth quarter of 2020 and another $170 million in the first quarter of 2021. And according to Square, those Bitcoin investments were part of the company's, quote, ongoing commitment to the cryptocurrency. Square holds approximately 8,000 Bitcoin, and paid an average price per Bitcoin of roughly $27,000. And as of late October, Square's Bitcoin investment is worth more than $500 million. And Dorsey even has hashtag Bitcoin in his Twitter bio, and it's actually the only thing you can find in his bio. And if that wasn't already enough, let me quote what Mostly Borrowed Ideas wrote in his Square analysis. Interestingly, Square seems to have taken an ideological position on Bitcoin, and hence Cash App does not allow trading in any other crypto. This is particularly concerning since Venmo just joined the crypto bandwagon in April 2021, but by letting its users trade in 4 crypto coins: Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. I have no particular opinion on any of these coins, but I think it is fair to say that these coins are considered legitimate by the vast majority interested in crypto. Now, if we take all of this into consideration, the fact that Square actually benefits from increased crypto engagement, and Dorsey's almost ideological view on Bitcoin, well, you should at least start raising your eyebrows when he starts talking of hyperinflation, because Bitcoin is generally perceived to be an inflation protected asset. Now contrast that to Warren Buffett. One of the things you have to laugh about him is that despite his incredible success, he has always been very quiet and refused to comment on major political events. Alright, if anyone wants to hear it, here's my take. Clearly I know less than Jack Dorsey does, and to be honest, I don't really have a strong opinion on where inflation will be a few months or a few years from now. And actually I think it's probably a waste of time to debate where inflation is heading, as it's such a complex and fuzzy topic. If, however, I were forced to make a prediction, I would say that I think there's a very good chance that high levels of inflation, as we are experiencing them right now, well, that is indeed transitory, I think. And let me explain why. I would like to show you a chart here. Clearly, one of the many causes of inflation are the supply and demand side. After COVID and the lockdowns around the world, it was obvious that both supply and demand needed some time to normalize. On the other hand, it was not very hard to predict that there would be a lot of pent-up demand. People were saving a lot of money during COVID, more than usual, and thus they were and are willing to spend much more money now than that things are opening up. Demand for nearly everything is surging. And on the other hand, there is a weak supply, as the supply chains of an overwhelming number of firms are absolutely struggling. There seems to be a shortage of pretty much everything. Microchip shortages, shortage of trucks and drivers to deliver goods. So in our supply-demand metrics, we're certainly in quadrant A right now. High demand for goods and services, but weak supply causes rising prices. Now, will this persist though? Does pent-up demand last forever, and are supply chains broken forever? Again, long-term high inflation means not just a one-time spike, but repeated price rises over time. And personally, I don't think the current conditions will last forever. COVID is a one-time economic shock, and of course prices will continue to rise, but the rise will slow to normal rates. I also think that as a response to the current situation, global supply chains will be reorganized and companies will try to be less dependent on a just-in-time inventory management. And the other primary cause of hyperinflation is an increase in money supply that is not supported by economic growth. And pretty much all of the major central banks around the world have been printing money like crazy. If we consider the money supply in the US, for example, we can see a significant increase starting in 2020. Personally, I would expect the government to hit the brakes on these spending trends though, once the pandemic is behind us. I seriously don't know what the long-term consequences of this major increase in money supply will be. However, it's certainly helpful to acknowledge that there are also deflationary forces at play. For example, technology or digital technology and demographics, so decline in population. Those are two major deflationary forces that come to mind. There are also much more clever people than me who were discussing the likelihood of hyperinflation. I'll just show you a part of a Cullen Rocci blog post on the screen right now, in which he references his own research paper titled Hyperinflation, It's More Than a Monetary Phenomenon. Just pause the video here to read what he wrote back then, but according to Rocci, money printing isn't causing hyperinflation. Instead, hyperinflation is usually caused by major disruptive political events. Just consider the Lebanon again. You can do your own research here, but basically the country has been without a fully empowered government since the catastrophic explosion at Beirut port in August 2020, which caused basically widespread social unrest. And to get back to Dorsey's claim, I would say that overall people were simply triggered by Dorsey's use of absolute words. Of course, there is not a 0% probability of hyperinflation, but I think it is fair to say that the odds of inflation rates exceeding 50% monthly in the United States, or maybe in any other major developed economy, are really, really low. And maybe one last word here. If you really believe hyperinflation is coming, what should you invest in? Well, the best investment choice is certainly to take out as much debt as possible and to buy useful things or great assets with that money. But keep in mind that if you are wrong and hyperinflation does not happen, then you are absolutely screwed. So this would certainly not be something I would recommend. However, if Dorsey really believes in what he is saying or tweeting, then he should take out a lot of debt at Square and Twitter too. But we haven't seen that so far. And then the next best investment choice are stocks. And ideally you want to own those businesses that have a lot of pricing power and that are asset light. And I've actually talked about this in another video of mine. Go check it out. And I think that's it for today. May your finances and investments prosper. Good luck.